Investing in ETFs, exchange-traded funds. What they are and how they work. What are ETF? ETFs, exchange-traded funds, are special passively managed investment funds, or SICAVs. As with all funds, when you buy an ETF, it is as if you were buying a basket of securities. Investing in a fund is equivalent to putting your savings together with that of other investors. The fund manager will then buy with this money the instruments on which you are going to invest. The performance of the investment will be given by the result of all the individual instruments in which the fund invests. What are the advantages of ETF? 1. Liquidity. As listed instruments, ETFs are extremely liquid instruments. This means that it is easy to buy or sell new shares without running the risk of seeing their value fall. 2. Versatility. Thanks to ETFs, even the small saver can access the main market indices without the need to buy all the securities in the basket. 3. Efficiency. Passive management makes investing in ETFs extremely beneficial. Consider that the cost of managing an ETF hardly exceeds 0.5%, while that of an active fund exceeds 2%. 4. Transparency. The high degree of transparency of the investment is inherent in the very nature of ETFs. You can easily have a complete picture of the instrument from different points of view, from currency exposure to credit worthiness, from the assets managed to the type of replica. 5. Security. The assets invested in ETFs are separate from that of the company that takes care of the issuance and management. Therefore, it is returned even in the event of bankruptcy of the same. 6. Strategy. Thanks to ETFs, it becomes easier and more convenient to develop multi-asset strategies that exploit medium-term growth trends in the markets based on macroeconomic trends. How do ETF work? The peculiarity of ETFs is that they are funds that adopt passive strategies. This means that ETFs are intended to track the performance of a given index or the price of a given asset class. The FTSE MIB ETF, for example, will have the same daily result as this stock market index, as well as a gold price ETF will track changes in the price of this market. To achieve this, the managers of an ETF purchase shares of securities of the benchmark indices, technically called benchmarks, in an amount proportional to the available resources. In this way, the value of the investment will be exactly the same as that of the replicated index. Unlike active funds, therefore, where the manager has a wide discretion in buying securities to try to generate return, when you buy an ETF, you already know in what kind of products your savings will be invested. The performance will therefore not depend on the skill of the manager, but on the performance of the chosen index. How to invest in ETF? Which ETFs to choose? When selecting ETFs, you don't just have to look at the asset class to which they refer. In fact, if you decide to invest in a single asset class, there are many different options. How do you choose between two different ETFs whose performance is linked to the same index? Here are all the factors to take into account. The amount of assets that the fund manages, which determine its liquidity. The replication strategy, physical or synthetic, favoring the former where possible. The cost, the reference currency. The provider, or the house of management of the fund, favoring companies of proven quality. Premium or discount at certain times when there is a particular demand for a product. A premium or discount can be created at the time of sale of your shares. Is investing in ETFs worthwhile? ETFs are extremely practical and usually inexpensive tools. In recent years, they have gained a lot of popularity as the ability of active management to be able to outperform the benchmark consistently at higher costs than passive management has been questioned. ETFs are publicly traded instruments, and ETF shares can be bought and sold at any time, just as if they were regular stocks or bonds. Why invest in ETFs? Unlike most active mutual funds, ETF shares are bought and sold on the stock exchange. To give a sense of the size of the market, about 1,000 ETFs are listed on Borsa Italiana alone. This gives the investor great flexibility and all the guarantees of choosing a regulated market. You can set stop losses and limits, or even buy on margin and see short. Investing in ETFs allows you to Diversify your investment. Diversification is the golden rule for all investors who want to reduce the risk of their investments. At one time, getting a diversified portfolio was very complex because it involved buying a lot of securities. Now, with a single instrument, the problem of the specific risks associated with the purchase of individual securities no longer exists. Thanks to ETFs, diversification becomes simple and effective. Low costs. ETFs reduce investment management costs. This is because, due to their structure, the managers are able to optimize the buying and selling operations, consequently lowering the general costs of management. There are also, according to many, limitations to investing in ETFs. Some argue that passive strategies, although they are advantaged in positive market phases, pay a pledge in the event of a reversal of the market situation. Then there are those who argue that the spread of ETFs brings instability to the financial markets by flattening those differences that allow us to recognize the merit of fundamentals. I hope you liked the video. In that case, I invite you to subscribe and put a like to support the channel. Thanks.